Welcome back. Now, Lesaka Technologies expects its earnings to rise by about 40% in the 2026 financial year. The fintech operator delivered on guidance, reaffirming FY 2025 outlook and projecting positive net income in FY 26. The group, however, reported a lower operating income for the period. And join me to unpack those results and more is Southern Africa CEO Lincoln Mali. Thank you so much for your time, Lincoln. Firstly, just characterize the third quarter for Lesaka. What did the goals look like and how far were they met?
Thank you so much, and thanks for having us. Very, very good quarter for us. It is a quarter where we've met guidance, and we now meeting guidance for the 11th consecutive quarter. That's very, very pleasing for us. We've seen, 43% growth in net revenue. Very pleased with the 29% growth in group adjusted EBITDA, and excited about 98% fundamental earnings. And that's very good for us. And I think, as you mentioned, as you started, we've been able to reaffirm our guidance for the end of the year, 2025, and be able to confidently reaffirm guidance that we gave to the market for financial year 2026. And a big milestone for us is the fact that we are projecting that we will be net income positive in financial year 2026. So overall, very good set of results, very good, strong performance in the underlying businesses, and very good journey of integrating the new businesses that have joined our fold.
Lincoln, before we get into the different dynamics and the different top line items of the divisions, I just want to first clarify, because you mentioned that net revenue is up 43%, but I saw that I think revenue was flat.
Yes.
What's the gap there?
Yeah, so most of the time, there is a lot of fluctuation in the revenue number between pinned airtime and non-pinned airtime. That is something you and I have spoken about before.
Yeah.
So about 2-3 quarters back, we try to focus the market on net revenue because it's a much more better indication of the strength of the underlying business. So that is why we focus a lot on the net revenue, and that's jumped 43%.
All right. Well, talk us through the revenue of the different divisions. I think I saw a divergence there between the merchant division revenue and consumer division revenue. Walk us through that.
Yeah, if I can start with the consumer division, which has had a stellar performance this quarter. Revenue up 32% to 446 million. And that really has come with record sales in transaction accounts, record sales in loans, record sales in insurance. Great momentum that we see there, and increase in our ARPU, now up to 106 rands. So really good positive momentum there. In the merchant business, very good performance. Net revenue up 58%. And in terms of the segment adjusted EBITDA, only up 7%. So this is where we're making a lot of investment, because we are bringing together the old Connect Group, the old Kazan business, and the new Adumo business. Those investments are going to start to come through in the quarters to come, the same way as we did with the consumer business. When we were first investing it, people couldn't see the upsize growth, and now people can see, and we see the same trajectory for the merchant business.
Is that also what's coming through in the lower operating income and wider loss that we are seeing because of those investments and those once-off transaction costs?
Yes, I think in terms of the operating income, we have had a write-down of our MobiKwik business, which is now listed in the Indian Stock Exchange. The positive is that we now know the value of that asset because it's now listed. Before, we had an indicative value. Now we have the value, and obviously, as markets fluctuate, the numbers will be lower, and therefore we have to take a write-down. But the positive is that we now have a clearer path to exit that asset because our restrictions end on the 18th of June. From the 18th of June, we can then be able to exit that asset and be able to either pay down debt or be able to do any other investments that we seek. So for us, that's a once-off phenomena which will be rectified as we exit that business after June.
Yeah. Lincoln, you and I have spoken a lot about the acquisitions that you have embarked on. Are there any more acquisitions in the pipeline? And also, what kind of impact then can we expect to see from the ones that have been coming through this whole time?
Yeah, let me start with the Adumo business. The Adumo business is now fully in our numbers. And already you start to see the impact in the merchant business of the Adumo. It's also given our merchant business a full scale of product suites, from cash, to lending, to systems, and payment solutions at that, and value-added services. So we now have a full bouquet of solutions for our clients. Then we've just bought Recharger, which is in the enterprise division. It is only in its first month in our numbers. It's already contributed positively, and you can see us projecting even better numbers in the months to come with that. In terms of future acquisitions, we are looking at a lot of prospects. We are looking at a lot of possible deals. We, as I've said before, have a very robust capital allocations committee, which will always be checking with us robustly as to whether what we're putting in front of them is that a deal that adds value to the group, whether in terms of solutions or EBITDA or geography or scale. So we're always looking at those, and that's why we're always saying our growth drivers are organic, which is the businesses that we have, and inorganic whenever we see those opportunities.
Yeah, all right. Well, we do have to wrap up the conversation there. Lincoln, thank you so much for your time once again and really giving us insights on those numbers. That was Lincoln Mali, Southern Africa CEO of Lesaka Technologies.